Hello, welcome to my channel today. This is a King's Tutor. The first time of joining us, thank you for clicking to this. Now, I want to say a question from the recently written Waec 2024. Okay, I want to say a question, ask question 7 relating to non-profit making organization. Now, let's see the question. Now, it says, Waec started business on 1st of January 2022 with $100,000. That is Gambian dalasi. Okay, that is their currency symbol as capital and kept few records. His asset and liability as at 31st December 2022 were as follows: premises 280,000, loan 150,000, stock 62,000, debtors 4,800, creditors 13,200, and bank 12,400. Now Wale withdrew $17,300 cash for his personal use and deposited an additional cash of $8,000 into the business account. You are required to A. Calculate the closing capital. B. Prepare statement of net profit for the year ended 31st December 2022. And C. Prepare the balance sheet as at that date. Okay, so we want to prepare this. Now I've done a video from scratch. So check, you'll see I'm non-profit making organization in the playlist, so you watch from scratch. Now let's prepare this. Okay, so the name of the owner is Wale. So the first account they're asking us to prepare is the closing capital. Now the closing capital, you prepare it using items from the statement of affair. That is now breached balance sheet item that relates to the balance sheet. Use it to prepare what the closing capital as at the end. Okay, so we're going to prepare the statement of affairs. So it will be statement of affairs as at 31st December 2022. Okay, 31st December 2022. Okay, so we want to prepare now using those items that was given as at December 31st. So at the right hand side will be our assets. Now the first item there you'll see is the premises. So we'll have our premises is a symbol. Premises is $280,000. Okay, the next one is the loan. So the loan will be for our liabilities. So we can have our liabilities here. So we can have loan. The loan is 150,000. Okay, while the next one is what stock. So I can have my stock under the asset. Now the stock is how much? Stock is 62,000. Okay, the next one is debtors. Can also have my debtors here. Debtors is 4,800. Okay, and the next one is creditors. Now creditors will be under liabilities also. It will be here. Creditors is 13,200. Okay, while the next one is bank. So I have bank is 12,400. Okay, so those are the items that they gave us that are his assets and liabilities after the first. So we're going to add them now so that we can have the balancing figure will become our capital here. Okay, that's the essence of preparing this. Balancing figure become the capital. So 280,000 plus 62,000 plus 48 plus 12,4 will give us 359,200. 359,200. Okay, now it is obviously greater than this. So 150,000 plus 13,200 will give us 163,200. If you deduct it from 359,200, now the balancing figure from our calculator will be 196,000. Okay, so this is 196,000. That is the closing capital because it is at the end of the year. Okay, so that's the first thing they asked us to prepare. Now the second one, said prepare statement of net profit for the year ended 31st December 2022. The statement of net profit. So we want to do that. Now we have statement of net profit for the year 31st December 2022. Okay, 31st December 2022. Now, in some other questions, if they didn't give us the opening capital, we are supposed to do the same thing, the statement of affairs as at the beginning to get the opening capital. But in this question, they gave us the opening capital. They said the capital, the started business at 1st January with $100,000 as capital. Okay, so that's the opening capital. So no need of doing preparing the statement of affairs at the beginning to get the opening capital. Okay, so now we're going to prepare the statement of net profit for the year. Okay, so doing that now, we have a format. I gave that in the full video. I'm sure you have checked that from the foundation. So we'll have our closing capital. Okay, so we'll have our closing capital. Closing capital is this, which is 196,000. The next thing is to add drawings. The drawings, if there was any drawings made. Now let's check in the question. The question there, if you notice that after in the additional information after the asset and liability, it said Wale withdrew $17,300 cash for his personal use. Okay, so it means his drawings is 17,300. So 196,000 plus 17,300 will give us 213,300. 230,300. Okay, so now the next thing now is to less our opening capital. And the question at the beginning they said started with a capital of 100,000 as at 1st January. So that's its opening capital. So and also we had additional capital. Now, at the same place, they said the drawings was 17.3. They also said, and he had additional capital of $8,000 to the business. So we're going to add it to this. So 100,000 plus this will give us 108,000. So we'll now deduct 108,000 from this. Now that will now give us, this is 300, and this will give us 105,300. So this is the net profit, 105,300. Okay, now this question also went further by saying we should prepare the balance sheet as at 31st December 2022, the balance sheet as at that date. So I'm going to prepare the balance sheet now, so which is a statement of financial position. So if we say the balance sheet as at 31st December 2022, okay, now we're still going to use this item because it is still the same 31st December, but it will change. Okay, so in this aspect now, we're going to have our assets. There are some things that we're going to add. Our assets, which is still start with our premises. The premises, which is 280,000. Okay, the next item there that was given to us. Now remember, we still have our liabilities. Okay, we still have our liabilities. So the liabilities here is the loan. So the loan is what? 150,000. Okay, the next one that we have is the stock. So we have our stock, which is what? 62,000. The next one is our debtors. Our debtors, which is what? 4,800. Okay, why the next one is our creditors. Okay, so I have creditors here. Creditors here is 13,200. Okay, now why the next one is our what? Our bank, and the bank is what? 12,400. Now if you remember that in a normal balance sheet, we're supposed to have our capital. So now the capital you will put here in this situation now is the closing capital, which is 196,000. So which is this 196,000. Now normally in a normal balance sheet, we're supposed to have capital, add net profit, less drawings and all that. Now we have done all that to realize this. which was what the closing capital. I'll still give another way whereby we can do to get that closing capital, which is 196,000. So in this situation now, there's no net adding of net profits or lesson of drawings. All that have been taken care of here. Okay, so now if we now just add up, so if we add 280,000 plus 48 plus 12,4 plus 62,000, we give us 359,200. Why this also, if you add up, it will give us 359,200. Okay, so that is the balance sheet. It has balanced automatically. Now, if you're confused about how we got this and you want to do it the normal way, which is supposed to be, let me show you, capital plus net profit. Now, what it means is that we're not going to use the closing capital, but opening capital. And opening capital is 100,000. So if we use opening capital, let's say 100,000, and we said additional capital, because they said additional capital was added, which is 8,000. Okay, so this will give us 108,000. Okay, why the next thing, after you've added your capital in the normal balance sheet, it will now be add net profit. Now, what's our net profit here? 105,300. 105,300. So this is give us 3. This is 13. This is 3. This is 1. And this is 2. That's 213,300. Now, the next thing will now be less drawings. Remember our normal balance sheet now. Less drawings. Now, what is the drawings here? 17,300. So 17,300. So if we do that, 0, 0, 3 minus 0, 0 is 13. 13 minus 7 is 6. This is 0. Carry 1. 10 minus 1 is 9. That's 196,000. That is what will be the capital on, which is what is here, 196,000. That's why we're using this like that. So even if we want to start doing the normal process, it means you're going to use the opening capital, add additional capital, then add net profit less drawings, which will still give you what we used, which was the closing capital. Okay, so that is how to solve that, and that's the question. Okay, so ensure you follow me for more tips. Click on the subscribe button, comment, share, and ask any question. We are also on Facebook, TikTok, Instagram. Follow us on this platform. Thank you very much.